afternoon, everyone. Hope you're well, and this finds you in fine fettle. Sorry about last time. We had this scheduled for mid-July, but unfortunately, I was traveling in Vietnam and Malaysia, and the hotel we were staying in, well, they said they had Wi-Fi, but of course they lied, and we didn't have any internet to do this on. So apologies for those of you who attended and got nothing, but hopefully this session will more than make up for it, because I've got a lot to cover in this session. Before we progress any more, can I just confirm that you can all hear me? Awesome, thank you, James. Well, without further ado, this session is going to be very practical and applied directly to markets. I could have produced a bunch of slides for you with great hindsight examples, but I think it's very important for you to get a real-time education applied to the markets with the present in mind, okay? So unlocking the code to successful lazy trading, we're going to cover all styles of trading, trend-based trading, reversal trading. We're going to discuss some trade ideas as well. But for those of you who don't know me, my name is Robert Colville, founded a brand called The Lazy Trader, and well, had quite a journey. I used to be a journalist, a freelance back in 2007, discovered trading by chance, and yeah, made every single mistake in the book several times over, developed over time when I became consistent, a style of trading focused exclusively end of day and end of week, so that I could just simply go about my day with my trades working for me in the background, so that I can entertain other things and interests without having to worry about being chained to the desk like a lot of intraday traders, for example. Okay, so I'm pretty sure you didn't tune in on your Monday morning to hear about me blabber on about myself, so let's get straight to the pith here and tell you about what you're going to get from this session. All right, so we're going to do a bit of market analysis so you can see the markets through the lens of the lazy trader, and you'll be pretty surprised at how simple it is. We'll show you how to identify key telling points, how to identify levels of support and resistance, profit zones as we call them, which are a little bit different to conventional levels of support and resistance, and of course trend-based opportunities. All right, we're going to also look at some past trades. And, well, we're going to do that first, actually, because we can just apply this to the syllabus. Okay, so I'm just going to go directly to the charts here. I use eSignal. So, in essence, if you're not trading a bounce or breakout, you're not trading anything. There's this expression, BBC, the bounce, the break, and the chase. All right, so I'm a swing trader, and all lazy traders are swing traders. We trade the pullback, or indeed a key reversal. And I'm just going to give you a taster of this, actually, with Euro GBP, for example. Let's go to the daily chart. I don't know if I've got any clients in the room now. If I do, please make yourselves known. I did last time. Doesn't matter. But here we go. Here's Euro GBP. All right, so as you can see here, we're in a predominant downward trend. And we can see this because objectively we've got the moving averages the right side of each other. We've got the 200, the 50, and the 20. And this is our objective measure to qualify a downward trend. If we haven't got what we call order, angle, and separation, when I refer to order, I mean the 20 is below the 50 and the 50 is below the 200. They're angled down for the most part, and they're separated, which gives us a very objective measure that we're in a downward trend here, Euro GBP. And certainly the time of taking this trade here, in July, my apologies, it was in June, we had this bearish pin bar reversal at the top of this rectangular box here. And this is a complex consolidation, or some people might even review it as a retracement. But the fact of the matter is the market's having a breathe in before it breathes out again. So given that we have a rectangular box here, which the market has failed to penetrate, we have a very good heads up that the market's going to go down when it gets to near above this point. Okay, so we've got the level here, which has 3 times out of 4 prevented price from going upwards of any conviction. And now, on the 9th of June, we had our signal to go short. And our signal to go short at the most efficient price point was the bearish pin bar reversal. And all we did for this one was we simply placed an order to go short with our entry just below the low of this bearish pin bar reversal, minus spread, minus additional pip with our stop loss above the high. We had tentatively, I think we had about 75 pips difference between our entry and our stop loss, and we were targeting 275. All right, so 275 divided by, so it's an easy 3.6 to 1. All right, so what we did was that we knew that, okay, we don't trade very often, but when we do, they're generally trades with high profit potential. So if we're wrong, we lose 2%. If we're right, we could potentially make 7%, 7.2%. So this is what happened. We placed our orders to go short, triggered into the trade, and then it went straight to hit target right at the bottom here. A number of our clients took profit there. Some clients decided to hang in there, anticipating the breakout of this level. And it's always nice when you've got an efficient entry in what is essentially a bigger move. We didn't get the close below this horizontal level here. It's quite a significant level in the way, obstructing further euro weakness against the British pound here. All right. And of course, if we do get the break of this level, and we certainly did, all we're waiting for is a retest of this horizontal level. Did we get it? No, we didn't. So we're not interested in this anymore. But we had a great, this was a reversal trade in a downward trend. Okay, so we're simply going with the ebb of the market flow. The great thing about this is we had a bearish pin bar reversal, which is a bearish price action based setup. We had bearish reversal divergence on the RSI. So we had a number of clues in our favor here. And that's important. The more clues we have, the better. And for those of you who are not familiar with bearish reversal divergence, it's a powerful sign that the bulls coming into this level, where prices pushed upwards into this level, are starting to waver and get less and less pronounced. And the bears are coming into the market. It's where price essentially makes a higher high. But when the RSI makes a lower high, like we have here, that's when there's danger on the horizon. And that's great if we've got a bearish outlook for Euro GBP. And that's exactly what happened. It went downwards. So that's Euro GBP. It was a simple sell at the top of the range trade in a predominant downward trend on the daily time frame. And this is as easy as it gets, really. We want the market to come to our level. If it gets to our level, fantastic. That's not the end of the battle. What we want is a price action based setup thereafter. And that's very important. Okay, so that was Euro GBP. I'm going to talk to you about an even easier trade, which was dollar CAD. And we traded this one on the weekly. I know to a lot of people who are relatively new to financial markets, trading the weekly does seem like the kind of time frame which you could quite happily or unhappily grow old trading. But actually, if I talk to you about this particular setup, you'll see exactly what the profit potential could be on the weekly. And it really is no idle time frame. If you get an efficient entry, and I'll discuss exactly what you can do to get an efficient entry on the weekly, then you'll have no problems, providing you get your entry correct. So looking at this, I think it's safe to say on the weekly that dollar CAD is in an upward trend. We've got key higher highs and higher lows. We've got the 20 moving average above the 50 and the 50 moving average above the 200. Nothing really terribly complicated about that. I would like to reiterate that moving averages are very objective and a way of assessing whether the market is indeed trending and the speed and the momentum of the trends. Like I said to you before, the flip side of the coin with our Euro GBP short. In stark contrast, we've got the separation, we've got angle, and we've got the order as well. Okay, so when the market pulled back to this bullish pin bar reversal here, you can see here you might see it as a morning star, for example, or indeed a hammer, whatever you call it. It's exactly the same thing. Some of you might even know it as a low test. The key thing is we've got a tail, and the open and close is in the top half, or ideally the top third of the bar. Okay, and that's the key thing. At the time of taking the trade, we had a higher low on the hourly time frame. Dare I go back to all the way back then? Let's have a look. Sorry, it was a head and shoulders. My apologies. We had a head and shoulders on the weekly then. So you can see left-hand shoulder, head, right-hand shoulder, which was correlated very nicely with our bullish sentiment on the weekly. Like I mentioned to you before, we might have a bullish pin bar reversal on the weekly, but what are the shorter term bars and sellers saying as well? The fact of the matter is if you think of a machine with the smaller cogs turning the bigger wheels, it's very much like this with trading. And what we need to close the daily is, of course, 24 hourly bars. And of course, to close a weekly bar, we need 5 days. And so that's why we do play pay very close attention to what the smaller, shorter-term buyers and sellers are doing. Okay, so what we did in this instance was, okay, we saw great upward trend. It's simply buying the dip in an upward trend. There's nothing alarmingly complicated about doing this, but it's amazing how many people try and overcomplicate the issue, all right? And it's human mentality, human nature to do that. To make more money from trading, your strategy needs to be more complicated. No, that's nonsense. Don't worry about that at all. What I'm teaching you here is as old as the hills, and it hasn't lost any of its raison d'etre for being as old as the hills, okay? So here we go. We wanted an efficient entry for this because, of course, if we look at the upside, if we were to take the break of the high here with our stop loss below the low, we haven't really got much of a profit potential, barely a 1-to-1. So what we did was we saw, okay, the week in which we took the trade, we thought, okay, we're going to place our entry above the high of the setup week. Let me zoom in for you with that bullish pin bar reversal here, and we placed our stop loss below the low of the week which took out the high. So we've essentially half the distance between our entry and our stop loss. So we've turned a 1.5-to-1 trade, taking the conventional entry into a 3-to-1 trade. And that's the beauty of getting a tight entry, and that's what we did. Okay, and then what happened was a number of our clients decided to scale out of the position here. We've hit this strong level of resistance. If we're trading a trend-based strategy, typically the previous swing high, if we're going long, acts as quite a meaningful level of resistance, obstructing price from getting new highs. If it gains a new high, then that's quite a big event. But it does make sense to, on one hand, bank profit, but on the other hand, keep yourself in the game, because it would be an absolute shame if you're just simply going to cut a winner short very quickly. And there's this whole adage, let your profits run, cut your losses, for example. And that is so true in so many walks of life, whether it's relationships or business deals. You can think of many, many metaphors to trading financial markets with that. Let your winners run and cut your losses early so that you don't bear a full hit. All right, so we're still, believe it or not, currently in this trade on the weekly. We're all the way up here, doing fantastically well from it, and I know a number of our clients are too. And if we look at the monthly time frame here at dollar CAD, we can see we're currently at quite a big level of resistance in the way at 1.300, and we've got this next level in the way as well, 1.400. Curiously enough, not only are they technical levels, they also correspond with psychological numbers, and a psychological number is typically a double or a triple zero, and these will always be obstructions in the way of going long, because they're typically levels where banks, institutions, big swinging gorillas in the market will have many of their orders, and banks and institutions in the market, certainly in the less liquid ones, are going to be having more of an influence and more sway. All right, but so as far as dollar CAD is concerned, I hope you've seen for yourself the profit potential. So for example, let's just give you an idea here. For those people, our client lazy traders, who actually took this trade and had a typical entry between entry and stop loss of, say, 140 pips, but decided to take it all the way up, so 778 pips divided by 140 was 5.5 to 1, times up by 2. Many people risk 2%, given the frequency of our trades is between 5 and 8 a month. They'll be up 11% on the weekly time frame, and this trade has been going for 1, 2, 3, 4, 5, 6, 7 weeks. 6 weeks, 7 if we count the end of this week. All right, so 11% for 7 weeks is not bad at all, really, for a percentage gain. That 11% over the course of, say, 2 months, just shy of, that really isn't bad at all. And when you think about it, there wasn't really much effort in actually identifying this trade. Let me just recap for those of you who are wondering whether I'm speaking English or double Dutch. Hopefully I've explained it clearly enough, but I always like to go as quickly as the slowest person in the room. Believe me, trading didn't come easy to me back in my formative years, back in 2005, 2006. So I'm never going to assume that any of you have a certain level of prior knowledge. We've all come from different backgrounds and have varying degrees of prior knowledge of trading. Okay, so just to reiterate, we've got upward moving trends here, supported by the fact that the 20 moving average, exponential moving average, is above the 50. The 50 is above the 200. We've got a bullish price action based setup after a dip, and all we're looking to do is simply get an efficient entry for the continuation of this upward moving trend. And so we entered with our entry above the high of the bullish pin bar reversal, plus spread, plus that pip, with our stop loss below the low of the week which took out the high. Okay, so, and we just simply left it. I know some people who like to be conservative with their trading, they like to trail, objectively banking in profits along the way. They like to trail above the low of every second buyer bar. So it would have trailed here, they would have trailed here, and they would have trailed here, and they'll still be in the trade, actually. And the 2-bar trail for every second buyer bar in an upward trend for a long, or for every second seller bar in a downward trend for a short, is actually a very good way of doing it. But of course, for it to work properly, you need speed and momentum in the market. Can we always get that? Well, nothing is ever guaranteed, unfortunately. That's the problem. But certainly, when we're trading with the trend, that's far more likely to happen. Okay, if we're trading trend reversals, it's always we're going to be in purgatory for a much longer period of time. And when I say purgatory, I mean that horrible zone, not knowing whether your trade is going to be a winner or a loser, and you're just looking at it thinking, "Oh goodness, please do something." And I'm going to talk to you about a trade setup which did just that, and it's a more recent one. But before that, I'm just going to talk to you about a FTSE trade. I know a number of you who are based elsewhere in the world, other than the United Kingdom. It doesn't matter whether you trade the FTSE or not. Please treat this as a price action based setup. We'd trade it exactly the same way if it was a currency pair, or whether it's a commodity or indeed a stock. It's just another example of a trade. If this, say for example, was gold or cable or Aussie dollar, whatever, we'll trade it in exactly the same way. And I'm going to show you exactly what we did here. Okay, so we have the FTSE 100. We are cycling to the downside here. Okay, this is quite close to the major reversal point. We had the lower high here, double top formation like so after it came off its all-time highs at 7100. It broke the neckline of this double top formation, which is a reversal pattern, and it tested old support, this old neckline support level here, just shy of 6900. Tested it as resistance. We had a bearish pin bar reversal, which is, of course, a sell signal for us. So what we did was we simply placed our order just below the low of this bearish pin bar reversal, stop loss above the high, and our first target was, surprise, surprise, the previous swing low here, this horizontal level, just shy of 6660. Okay, so that was our first target. You can see here that this level also corresponded with a wider level of resistance seen throughout 2014, and this horizontal level here, for those of you who've been following us since 2014, will know all too well that we made a very good return off just trading this level short, actually. And yeah, there's no reason why, even though it's broken to print its all-time high, recently, there's still no reason why this can't function as a soft level of resistance. And when I say a soft level of resistance, I'm meaning a level of resistance that's been respected multiple times on multiple occasions, but it's also been broken as well. Okay, so what we did was, I'm sure many of you probably guessed exactly what we did now, based on the previous few examples. Placed our order just below the low, minus spread, minus that extra 1 point, stop loss above the high, plus spread, plus that extra 1 point, and we got triggered into the trade rather quickly. The great thing about the FTSE is that we made a cool 6% in about 3 days here on this one trade. I know a number of people decided to take it to the next level here. We got out, unfortunately. Hindsight's a wonderful thing, isn't it? And then what we're waiting for after that is a retracement. Again, you see now we're making lower highs and lower lows now for the FTSE, so it makes sense in this, what is amounting to a downward trend. Note that we've got the 50 moving average crossing down below the 200. We've got the 20, which is the dead cross below the 50 and the 200 here as well. So it makes sense here to simply sell the rally. We've been confirmed in a downward trend. Now we're just waiting for a signal bar to go short. And that's it, really. Nothing earth-shatteringly complicated about it. The number one thing you need for trading this style is patience and discipline. I know a number of you have heard me harp on that before, but it's no idle statement. And this is why, as I'll discuss later, it's important to have a punishment and reward system if you're ill-disciplined. So after this rather meteoric comeback on the FTSE 100, we had a sell signal. There we go. There we go, bearish pin bar reversal. And I know some of our clients took this. Unfortunately, one of our analysts picked it up. I was in the jungle in Malaysia, not knowing the difference between an internet connection and, well, a nightmare getting lost in the jungle, basically. So there we go. We have the bearish pin bar reversal. So our team basically placed an order short, entry just below the low of this bearish pin bar reversal, minus spread, minus that extra point, stop loss above the high, plus spread, plus that extra point, and then their first target was the previous swing low. Because it makes sense. If you're trading with the trend, it makes sense for the first target to be the previous swing low, and then the second target to be a lower low. Okay, so there we go, got triggered into the trade. We started trading for every 2 seller bars here, above the high of every second seller bar. That makes sense. And there we go, trade it again, as this is the second set of seller bars. And we didn't get that. At the moment, we stopped out at a small profit, and now the FTSE has come back. But what is alarming about the FTSE now is the fact that it's failed to make a lower low. It's making a higher low here. So if it takes out the high of where our initial entry was, then that's a bullish reversal pattern right before your very eyes. And we can reasonably say that the FTSE could come back up to test this all-time high level again. And when the FTSE, if and when the FTSE comes up to test this all-time high, then what do you think we're going to do? Do you think we're going to trade the breakout long, or do you think we're going to sell if and when the FTSE comes up to this level? Please let me know what you think in the chat window. What do you think? Buy or sell? If the FTSE comes up to 7100, what do you think would be a pragmatic, practical, sage thing to do? Buy or sell? Okay, Sandy, I like I like the cut of your jib there. So absolutely, because this is an all-time high here, 7100. It's even a psychological number, so it makes sense. People who are buying stocks and they see that the FTSE is back up to its all-time high, this would be a fantastic sell opportunity at the top of this, testing this level of resistance here. It's far more likely we're going to see some kind of like ricochet movement off this horizontal level, and this is what we refer to as a power zone, a level of, some of you might already know this, a level of supply. Okay, people will be wanting to get out of their positions, thinking, hey, goodness, it's the all-time high. Gee, when are we going to reach this level again? The market's looking pretty exhausted. It's struggling. And rest assured that certainly if I did see the FTSE coming up to this horizontal level, I'd have a sell order just on the level. Stop loss, say, let's have a measure here. Say 50 to 75 points away, all the way up here, just to make sure. The wider the distance between your entry and your stop loss, the more wiggle room you have. Okay, and even if we trade it to the bottom of this, okay, got say 77 pips difference between our entry and our stop loss, and 592 points even, sorry. My apologies, we refer to the FTSE in points, not pips. There's an 8-to-1 reward to risk trade. If we're risking 2%, then that's a 16.4 potential percentage gain here. Okay, and this is where, if we're looking to sell actually on the level, okay, sure enough, a lot of you might not like the look of coming in the way of an oncoming train, and this is for certainly someone who has a greater risk appetite. But it does ensure that if the trade does turn around at this horizontal level, then you've got a very efficient price for it at the very top without actually having to wait for a price action based opportunity. Okay, so that's the fact of the matter. Those people who do like a price action based confirmation in the form of a bearish pin bar reversal supported with bearish reversal divergence and or a bearish reversal on the hourly time frame, you know, you might not get it. You might just get that quick ricochet whiplash off it. And if that happens, then it's, you know, it's very frustrating if you see that. And make no word of a lie there. And I'll show you an example of that, a more recent example. But I just want to talk to you about a potential trade opportunity for Aussie New Zealand at the moment here, looking at price action. We have this instance where we've got, here we are. We've got this range-bound market here, like so. We zoom in, you can see here that prices generally, if we look on the weekly, this is where we use time frame correlation, generally in a downward trend. It's fumbling at the bottom of this long-term range here. We get down to the daily, and we can see that we've got this double top formation here, and price has broken this level, it's closed below it, we've had a retest, whereas the old support of this neckline, this double top formation has become resistance, and we've got our bearish pin bar reversal here. This is very similar to a trade which we talked about earlier, actually, the FTSE, okay? There are some notable similarities in that. Do you remember the FTSE? We talked about a double top, which broke, the neckline broke, and then we just traded, essentially sold the rally afterwards. You can see here that, okay, we've got the close below the neckline, price has rallied upwards, and now we've got a bearish pin bar reversal, which would be, the break of the low would be a very good entry point for a sell, stop loss above the high, and then we can trade it to the previous swing low for target 1, or indeed a new low for target 2. Okay, so a lot of slightly more aggressive traders would do, who like trading off the back of key reversals, will simply place that entry just below the low, minus spread, minus that additional pip, with their stop loss above the high, plus spread, plus that additional pip. And first target would be the previous swing low, like I mentioned. Let's look tentatively to see how much it would be. Let's just say roughly 100 pips difference between our entry and our stop loss. Target 116, but we know that's just target 1. Say if we have target 2 down to the next horizontal level. So 3 to 1, if we do take it all the way down to the next horizontal level, it could be here, like so. But this is a higher risk trade, actually. I'm going to talk to you about another trade setup on the weekly. It's Euro Aussie. You can see here that Euro Aussie has actually formed, or is just oscillating in this rectangular shape at the moment. So just like with Euro GBP, like we discussed earlier on the daily, and the trade we took on the daily all the way back in June, it would make sense to simply sell the top of this rectangle. Because we can see here, the last time it came to this price extremity, price just fell down, got to the bottom. So here we could potentially see it again. We've got bearish reversal divergence on the RSI, setting 6 as well, which is, once again, just like we had on Euro GBP, a positive sign for a sell. And just to remind you, bearish reversal divergence is where we have on one hand, price makes a higher high like we have here, but on the RSI it makes a lower low. So it's a disagreement. And what that reflects to us is the fact that the strength of the bulls is getting less and less pronounced, and it's taking far longer in terms of time to reach new highs, and it's starting to get all very tired, the bullish moves in the markets. Okay, so what we're planning to do potentially for this one is just place our entry just below the low here, minus spread, minus additional pip, stop loss above the high of last week's bar. Or indeed, if we do get the break of the low, then what we could do to get a more efficient entry is keep our entry the same, i.e. below the low of the bearish pin bar reversal closing last week, but put our stop loss above the high of this week to get an extra efficient entry. Please just be reassured, actually, if we're trading all the way to the bottom here of this rectangular box, then what do you think? Well, you've got, say, 315 pips between entry and our stop loss, and we're targeting 1,196 pips. That's an easy 3 to 1. But we just need to be very patient for it. Look at how long it took previously after Christmas last year. Sorry, 2014. 1, 2, 3, 4 to go down to the fourth quartile of this rectangular box. So you do have to have patience on the weekly, and that's not something that can really be taught. It's something you're going to have to feel as and when you get feedback from the market will always teach you. And there's always that kind of gnawing pain as to, okay, what have I done differently? What could I have done differently? And the market will be your best mentor ultimately. And you'll discover a lot about your own personality when you're trading financial markets. You might kind of think you're someone who'd rather have like a huge profit potential trade, but accept a lower probability of it hitting target. But then you might actually, after enough suffering, waiting of multiple hits before that big win, you might say to yourself, actually, I don't like this. I'd far rather get smaller wins, but on a higher frequency. Okay. So this is on our watch list, Euro Aussie, for a very good reason on the weekly. We are keeping this tentatively on the watch list for the reasons I just mentioned. We are looking also at, well, if we do actually get a retracement on Kiwi dollar, we are simply waiting to sell the rally if we actually get one. It's been very tricky selling the rally here for Kiwi dollar because we really haven't seen any retracement whatsoever. It's been moving downwards consistently and just to the side. Very bearish indeed. One thing I want to bring to your attention, for those of you who do like the look of the weekly, is the US dollar versus the South African rand. As you can see here, in an obvious upward trend. Very obvious upward trend. I mean, this is the most bullish of currency pairs I've seen in a while, because we've got not only all this separation between the 50, the 200 and the 20, they're the right orders. We've got 20, 50 and 200. They're sloping upwards between, if you imagine the clock between 12 and 2 p.m., which is extremely bullish, and they're all angled to the upside. So as I'm sure, or I'm hoping you would have got from the previous trade examples, it makes sense to simply buy the dip here. And that's what we'll be looking to do. We're just going to be waiting for price to come down and make a higher low, and we'll wait for a bullish formation on the weekly time frame in the form of a bullish pin bar reversal or indeed a doji or a double inside bar, unlikely a double inside bar, but we're waiting for a doji or indeed a bullish pin bar reversal. So this is on our watch list for that reason. We're just lying in wait for something to happen for this one, okay? So that is US dollar versus the South African rand at the moment. So you can see here with the FTSE example as well that we actually do apply the same kind of logic regardless of the asset class. Okay, let me show you gold. Very unloved at the moment, and with the onset of interest rate hikes in America and certainly the United Kingdom, it's going to drive gold even further down, because gold is, a lot of people forget this or don't realize this, gold is actually quite expensive to keep in its physical form. And if investors are receiving a high interest rate elsewhere, even if it's in a high street savings account, God forbid, with interest rates have been increased, then they would make more from that, ironically. But in terms of trading gold for a technical sell, we can see here that, okay, we've got the 200 moving average above the 50 above the 20. We've got this strong level of support here at 1162. And it just makes sense to simply sell the rally. If we get one, if we get a retest of this horizontal level and a bearish pin bar reversal, then we would look to trade that short. But we just need to wait for things to get a little bit better before we anticipate them to get even worse for gold. And it's really looking quite bearish at the moment, unfortunately. Let's see if we've got any bearish crosses on the monthly. Come on, e-signal, come on. It's taking a while to load here. Yep, the 20 is crossed below the 50, the 200. It's a bit of a way away. But anyway, that is gold at the moment, and it really looks like it's just tilting over. It'll be interesting to see where it goes to. Look at this. End of the bull rally for sure. The bull run. I'm going to talk to you about another trade which we took relatively recently, actually. This was one which we took in July. And I just want to talk to you not just about winning trades, but trades which went wrong and didn't get a plan. I mean, we had a very good June, we had a very good July, but this is one of the trades which, you know, didn't really get a plan, but I want to talk to you about the logic of taking it and how managing it if it didn't get a plan. Okay, so this is Aussie yen. We had an outside bearish pin bar reversal here, and we were looking here. We saw this was, okay, prices range bound by and large, but we're just looking here and thinking, well, this is simply, if we traded this one short with our entry just below the low of this engulfing seller bar, stop loss above the high, then it would be tantamount to simply selling the rally here. So that's what we did in anticipation of the break of this horizontal level here. Okay, so we did that, we placed our orders just below the low, minus spread, minus an additional pip, stop loss above the high, plus spread, plus additional pip, and we've got triggering into the trade, day 1, day 2, day 3, day 4. If we're in a trade for 4 days and we haven't had the luxury of moving our stop loss to break even, then we kill the trade. So we're at a loss there, a small loss, half a percent or 1% or 2%. At a loss, we just kill the trade. Because if the trade doesn't move in 4 days, then it's very unlikely it's going to move at all in your favor. And past experience has taught us this. Okay, so we did kill the trade. Frustratingly, it went in our direction. And I know a number of lazy traders who just kept on to this, kept it running, took their profits at the previous swing low, scaled out, bought back half the position, and waited for a potential break of this horizontal level, which hasn't happened yet. So that's a trade which didn't really get a plan, but you know what? Nothing works all the time or wins in the market the whole time. You just need to be considered and calm and patient. You heard me say this to you before. Patience and discipline will make you the trader. All right, so one we're really interested in at the moment is Aussie New Zealand, and this is just simply selling the rally here. There we go. Okay, so that's an outlook of some of the currencies we have in our sights at the moment. We don't trade very often, but when we do, we typically anticipate very good profit potential. We have trades which run, like, for example, the dollar CAD one, which we mentioned earlier, for weeks, sometimes months. But that's what I mean when I talk about lazy trading. You set your orders up and your money's working for you. Sorry, let's go to dollar CAD here. Almost on autopilot. You've done the hard work. It didn't take you very long, but then you're just simply moving to do your own thing away from trading and just letting your trades work for themselves. Because when you're looking, I don't know if any of you have experienced this, certainly in the days when I was intraday trading in my formative years, I found that I would place trades out of boredom, and they would lose, and then I'll place a trade out of frustration, that would lose, and then I'll place a trade out of anger, and of course that would lose. And that's a very slippery slope for a lot of people, certainly new to financial markets. And a lot of our clients actually come from backgrounds of intraday trading, and they too have made a lot of mistakes intraday trading, and they want just a more peaceful style of trading where they can just simply go for trade setups with high profit potential and just be in a position where they can just simply let their trades do their thing, accepting the profit potential, but also accepting the risk is relatively small per trade. Okay, and that's the great thing about trading the daily and the weekly. You're generally immune to news announcements as well, or random spikes in the market. And random spikes in the market, I'm sure a number of you have experienced that. No news is announced, but there is just a spike anyway. That's market makers and all those kind of people, for example, stop runs as well. These typically happen at times of low liquidity on the slightly lesser traded currency pairs. Okay, so I've had FX Boyke. Hi, FX Boyke. You are regular, I believe. How do you handle news and economic data releases? Well, the answer to that one, a very good question. The answer to that one will surprise you. I don't even care. I don't even look at the news. I couldn't care less. I trade with the trend and use my objective indicators in the form of moving averages to confirm the trend. And, because if I was looking at the news the whole time, I would always be trying to second guess what people have predicted and trying to second guess my strategy. If you backtest any technical strategy, for example, and it's a positive one, i.e. giving you long-term profitability, do you really think that backtest factored in news? No. I've done previous webinars on why it pays not to really care about the news. Of course, you need to look at the context, which is slightly different, and that's something we'll talk about another time, like the interest rate differentials between the countries, and how that can perpetuate an uptrend or a downward trend. Typically, countries with a higher interest rate, certainly in the Western world, will attract higher levels of investment. Okay, but please be rest assured that if it's an upward trend, then news has been factored into the upward trend. And when we see a higher high followed by a higher low, the higher low is an opportunity to get in long after profits have been taken by various people in the market, generally the smart money. That's get in and get out earlier than, for example, the retail traders, which is just as well, really, because a lot of them are the ones that either make the trends, if they're institutions or banks, in response to data releases. But rest assured, as retail traders, we just want to hop on to pre-existing trends. We're not in a position to even think about creating the move ourselves because we just can't. Okay. Anyway, so that concludes our analysis of the markets and certainly past trade examples. I hope you've got a better idea as to how you too can profit from trading trend-based markets as well as range-based markets as well. There's always going to be a strategy according to how the market is, and it does make sense to be adaptable as a trader, okay, rather than just simply say, hey, I'll just trade an upward trend on the weekly time frame. That's all very well and good, and through saying that, you'd be head and shoulders above most people who try their hand at trading, but you really want to get into a position where you can essentially trade or be able to profitably trade the market, whether it's trending or range bound. Of course, if it's choppy, give it a wide berth, but you do want to be adaptable as a trader, okay? Okay, so just moving on, okay, I'm very well aware, what's the time now? Okay, we haven't got long at all. So one thing I want to do really is just say a big thank you to all of you taking time out today. Hopefully it's inspired you to take up lazy trading as part of your longer term trading strategy. One thing I want to talk to you about is an exclusive we're doing with FX Street. Because you've taken time out of your days to come here, I like to reward people who are proactive. And what I'm doing is I'm giving you access to our flagship online mentoring service, which essentially teaches you how to trade any asset class in any market from as little as 10 minutes a day. This has taken thousands of hours to produce. We've got a trading team of over 40 years combined experience, lots of training videos, weekly market analysis sessions, trade ideas, and we want to give this to you. For a snip of what it's been valued at, it's been valued at $1,997. And what we want to do is give you access for just $30, okay? So you can see it for yourself. And $30 is really a snip at how much we typically charge. And for that $30, As I said to you, you'll get access to all of us, our team, 40 years combined experience, access to our learning, video modules, weekly market analysis, trade ideas. We've even got a trader hypnosis audio course for you to get involved with. We've got pattern recognition software. And you know what? If you're not satisfied, we'll just give you a free refund. No problem. A refund. It doesn't have to be a free refund. But very few people take us up on the refund. So no love lost if you don't. But this is only valid until midnight tonight. I'd like to stress, get 88% off until midnight tonight. And to get this deal, all you need to do is go to www.thelazytrader.com/Forex training, Forex-training, buy the ultimate program and type in the promo code FXStreet8. Okay? So that's all you need to do in order to secure a refund, your place on thelazytrader.com's ultimate program. We do have testimonials. You'll find them on our website. And hope to see you on the other side. As I said, no love lost if you don't, but we're only going to be keeping this offer open until midnight tonight. Okay, so get it for $30, save yourself thousands of dollars. Okay, if any of you got any questions about today's webinar, please just make yourself known. We've got only a couple of minutes left. But in the meantime, while I have the opportunity, I'd like to say thank you for all coming. It's been a pleasure. Some great questions today as well. Keep them coming as well. And I would like to wish you a great day and a great trading week ahead.